Monday morning, day 91 of the 36-month Forex trading challenge. Back in the UK, this time last week I was in Dubai. Weather's not great. In fact, it's sunny today, but not great. And unfortunately, started to feel pretty rough having got back to the UK. I wasn't feeling great before I went. Felt great in Dubai, not feeling so great now. Maybe it's the weather, a lot of germs going around, who knows. But what that meant was that while I did my market analysis at the weekend, I was late getting up this morning, so late into the charts. Having said that, I've now caught up. It is 20 past 10. 10 o'clock, I was just in time to take a short opportunity in Euro Swiss franc. I'd been long this pair for a little while. I'd made some profit on that on a previous trade, and with no bias long or short on any position, just when the signal shows up, I got short this morning at 10 o'clock. Basically on this pair, the weekly and the daily charts are supporting downward pressure. We're at the top of the range on the 240 chart, so this looked to be a good opportunity, or a higher probability opportunity, to get short. But as always, time will tell. I've got my exit rules in place, and I'll get out if things don't progress my way within the next 24 hours. But for the moment, I'm holding that, and we'll see where we end up. In terms of my SIG1 strategy trades, all of those are in profits. These were all bids off either a 10, 5 or 3-year low. These are important turning points as far as I can tell, as far as my experience tells me, or potential turning points in the marketplace, and I look for a specific candle signal at those levels for me to get in. What that means is, because it's not, it's not a surgical entry, i.e. it's quite, on a weekly chart, it's quite difficult to pinpoint an exact entry. What it means is that those trades sometimes take a little bit of heat, as at least 2 of them did. But now, 2 or 3 weeks into those trades, all of them are in profit, and I'm looking now for them to breach certain simple moving average levels for me to add to those positions. So yeah, not quite as exciting as it was last week, being back home in the UK, trading from the office. But hey, the business goes on, and I'll continue to monitor the trades and take the signals as they show up. So good afternoon. It is Tuesday afternoon, and it is day 92. I'm a bit late getting on the video today. Didn't do too much recording yesterday, although I was busy in the background on the trading front. Basically got a new iPhone 11, upgraded from an iPhone 8. Did that on my existing contract with EE. Got a new handset for free, and effectively doubled my data for free as well. So a good deal all in all. So if you've not upgraded your phone, I'd encourage you to phone your provider and see if that's on the cards, which is what I did, and which is why I'm filming this on a brand new handset, which hopefully should increase the quality of the video. It's got a better camera on it here, but we'll see. Perhaps let me know in the comments. Today in the UK, it is Bonfire Night, Guy Fawkes Night, November the 5th. Gunpowder, Treason and Plot, commemorating the failed attempt of Guy Fawkes and his associated plotters, who tried to blow up Parliament many years ago. And we still celebrate this today, the fact that they didn't manage to do it, with bonfires and fireworks, which will be scattered all over the UK tonight. So there we go. On the trading front, things are going very well. My trades, and I'll jump into the charts in a moment, my trades are all progressing very well. This is month, what are we in now? Month 4. Is it month 4? I forget. Month 4, month 5. I need to check. I've had ups and downs, and down on the capital, but learnt a lot, and now getting more and more disciplined with my trading, understanding more about the markets, and perhaps the first few months in terms of losses was the price you've got to pay in any discipline to get to a level of expertise. But I'm still pushing on. I don't give up. I get some negative comments through eToro every now and again. I use that as a confidence building. It's a boost because you've got to go through the pain to get the gain. That rhymed. That was quite good. So yeah, I'll say that again. You've got to go through the pain sometimes to get the gains. So with that said, I'll jump into the charts now, give a quick review as to which trades I'm in, what I'm looking at, and yeah, have a look. Got any questions or comments, then please feel free to leave them in the comment section below. So first up, a look at my Sig 1 trades. This is where I buy or sell off a 10, 5 or 3 year low or high, or high or low I should say. All of these are bids off lows. Pound dollar cable got in here. We've progressed up nicely, closed above the 50 simple moving average. Where I am now with this, I'm in a position where I'm looking to add. I'm going to add when we get above this even handle 1.3000 and get a close above the 200 simple moving average on the weekly chart. This kind of step line is the 10 exponential moving average. Price is now above this. I'm looking to see that before I would add anyway, but good trade, and despite the Brexit to and fro, seems to be progressing pretty well, and I've locked in a profit here underneath the 50 simple moving average, which will give me just over a 1, in fact slightly over a 1-to-1 reward to risk ratio on my initially risked capital. In fact, it looks like it's about bang on a 1-to-1 reward to risk. So there we go. Got money in this trade, whatever happens. Australian dollar, US dollar. Australian dollar's been on quite a tear recently. Again, got in here off this low here. I need to look at this. That looks, let me just double check that looks to be in slightly the wrong place. That low should probably sit here. I'll need to fix that when I get off the air, but basically bought off here, and I progressed up nicely. We're above the 10 exponential moving average, and yeah, looking for a close above this even handle 70000, if I've got the right number of zeros there, and the 50 simple moving average to add. I would be adding then on a 2-to-1 reward risk ratio, which would be a decent place to add, lock in the profit, risk-free trade. Next into Australian dollar CAD, similar story, big XY bid candle here, closed above this level here, closed above this highs. Again, same story. We're looking to get above this level before I would consider adding. And then finally, New Zealand dollar CAD. This trade's caused me a little bit of a headache. It's been back and forth. This could just be accumulation at the bottom of this particular move here as people change their mind. But yeah, off this candle here. Big XY candle here, some retracement this week, but again looking to get above here. You know, that's 4 trades that I have on the Sig 1 strategy. If I get 3 winners and 1 loser, hey, happy days. That's a good scenario for anybody. Next into the synthetics. Don't have any trades on in the major pairs, so here I've got a range top sell in Euro Swiss franc. I got in here on this candle. Yeah, I got in this candle. It closed above the 50 simple moving average on the 240, but if you go into the bigger time frames, you see that we are below the 200 simple moving average on the daily. On the weekly, we are again below both averages, and look at this, 50 crossing over the 200 here on the weekly, so a good sign for downward momentum, although there may be some noise in between times. So decided I would get short at the top of the range. Range top sells are always a little bit dangerous. I used to just sell off the top. Now I tend to wait and see how things, you know, pan out. You know, if I'd have sold here, then you know, I could have been waiting for a long time to get any maneuver. May have actually been stopped out on my rules. With this particular trade, as we have closed below my entry, this stop pressure line plus 10 pips is no longer valid. Looking really to see a push down now and close below the 200 simple moving average on the 240 chart to hold this trade.
This was a little bit of a risk here. If I'd have got a close back above the 50 or a strong close back above the 50, I would have exited this position with a small profit. Sellers came in here. Got to get below this level now really to confirm the down move. So we'll wait and see what happens there. Next up into the commodity synthetics, and this is pound Aussie short. This was a trend trade crossover underneath the 50 simple moving average, which is now held. It's been tested once but is held. Slightly risky trade because we are trading down towards the 200 simple moving average on the 240 chart, and on the daily chart we're above the averages, so slightly risky, but doesn't necessarily matter. The interesting thing about this particular trade is that we are at I think that's a 3-year high. Yes, it is. 3-year high. These I updated at the start of November. It's a 3-year high, so you tend to get some selling pressure off these kinds of levels. What I've noticed over the years is that price tends to oscillate between significant highs and significant lows, which tend to be 10, 5 and 3-year highs, which is why I like to use this as a kind of support for my short trade here, and why the Sig1 strategies possibly are working out so well. I've moved my target up slightly just to reflect the fact that the simple moving average is sloping upwards. The 200 simple moving average, very likely to get a bounce there. I'm still going to get a 1-to-1 reward to risk on that. Take off half the position if we get here, and then hold and see where we get to. That would be a risk-free trade if we get down and test this. On the, just wanted to check this. I think it was this pair. No, it wasn't. Let me just double check the weekly. No, okay. Let me go back to the daily. So the final trade I have on in the commodity synthetics is Australian dollar, New Zealand dollar. This is the one that I wanted to highlight. So I'm long Australian dollar, New Zealand dollar. This is a Golden Gate strategy. What that means is we're in a ranging market, so Golden Gate is one of the strategies I can adopt. What that means is a close beyond the two moving averages that need to be down the middle of the range really. This is a clue that we're in range mode. You've got the averages kind of oscillating back and forth over one another on the 240 chart. Big clue that we're in range. If I go out to the Australian dollar, New Zealand dollar daily chart, what you'll see is the fact that we tested and held the 50 simple moving average. We then did that again the day yesterday, and today, you know, it's all bids off here. If I go out to the weekly, again, look at this, 200 simple moving average on the weekly. Got a test here, it was rejected. Price has held this level. This gave me a really good clue that my Golden Gate strategy entry signal on the lower time frame, the 240 time frame, was supported by the weekly and was also supported by the daily chart, and it's very likely I'm going to hit this target very soon indeed. Take off half the position, done in a risk-free trade. So I'm going to blog about this particular setup because it's a perfect setup in terms of the weekly supporting the daily and the signal coming off the intraday, the 240 chart. So yeah, looks like we're going to get there. And I'm going to blog about that on this will be day 92 at stgforex.tv. That's stgforex.tv. So I'll blog about that and that particular setup. These are the kind of setups that I look to find all the time, where the higher time frames are supporting an entry signal on the lower time frames. Where it's confusing, I tend to try and steer clear now. I like as clear as you ever can be in the currency markets. I like it to be fairly clear that, you know, there's a high probability that I'm on the right side of the trade on the intraday, backed up by the higher time frames. So as I'm just processing this this video, this is where patience is a virtue. Have a look at this. Aussie dollar, New Zealand dollar came up, almost tapped my target, and then retreated. That's actually triggered my second position in eToro. It's the way I have to do things in eToro. So I've got two positions on now in eToro. That's the spread working there. But just going to hang on, be patient. I think we'll get a second test of that, but time will tell. My rules say I've got to wait for the target. The target's clear. Patience is a virtue.
So while I wait for that Australian dollar and New Zealand dollar trade to hopefully hit its target, just wanted to talk about a couple of things. First thing I wanted to talk about is my trading rules, which I have written down in my, can't see that, it's back to front, but FOREX trading plan. So I have a set rules that I follow to pretty much to the letter. But the other thing that I've started to look into a little bit more and listen to a little bit more is my subconscious. So I've been trading for quite a long time. I've seen a lot of different things. And sometimes when I'm putting on a trade or selecting a trade based on a number of options, I can't trade everything. I've got a maximum risk exposure that I need to stick within. So sometimes I have to choose between competing signals. And what I'm starting to do now is to trust my subconscious. Don't necessarily know why I don't feel good about a particular trade or why I feel better about another trade, but starting to trust my subconscious has definitely kept me out of a few trades that probably I shouldn't have got into and didn't get into as a result. So I've been reading a lot about psychology, about how we learn and how we do stuff. I watched a film on the plane coming back from Dubai, which was about the secrets of greatness, I think it was called. And basically it was about sports people and how sports people become great. And it was about, can you teach kids to, you know, if it's football, if you get kids on a football pitch, can you show them to do this technique, that technique, etc., 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 and will that make them a great player? And the answer was no, it won't. And what they found on this kind of study, this analysis, was that actually it's play and experience, free play and experience, that actually makes somebody great at something. So they've kind of seen it before. They've done this tackle before. They've done this dribble before, to use the football analogy. They've done that. You know, they're not quite sure how they've learnt it, but they've learnt it a bit like how we learn languages. We don't sit there with a textbook. We learn as children from listening to our parents. It's all experiential learning, and I think it's exactly the same in trading. So I am starting to trust my subconscious a lot more. The other thing I wanted to talk about was stocks and shares. Now, I don't talk about stocks and shares on this channel. I have traded stocks and shares before. I'm a chartered accountant. One of the reasons I've steered clear of stocks and shares is because, you know, analysing accounts and all of this kind of stuff didn't really interest me in terms of, you know, researching companies and that kind of stuff. A bit too close to what used to be the day job. The other reason I don't talk about stocks and shares and don't trade stocks and shares is I think you have to specialise. My speciality is Forex. Stocks and shares, generally you need to be on the long side. You know, going short is risky, but with currencies you can trade them up or down. They go both directions equally as well. And stocks and shares have tended to move a little bit slow based on my experience in the past, and currencies move faster. I can trade them through my spread betting account with leverage, providing I manage my risk, then I'm generally okay. But I had some success actually over the last few days on a very, very small share portfolio that I do trade. And I bought some shares in Tiffany. Actually bought these for my wife through her ISA account in Tiffany. And Tiffany is the online retailer and retail retailer, or shopfront retailer, jewelry retailer, you know, very long heritage, very successful business by all accounts. And the reason I bought Tiffany shares was because looking on the high street, and I think we were down in London, Covent Garden. We went into Tiffany. I was chatting to somebody in the store. Business seemed to be booming. You know, death of the high street in the UK. Retail's not supposed to be great, but for some reason Tiffany seemed to be doing well. It's a luxury item, but it seemed to be doing well. So I bought shares off the back of that observation. No PE ratio analysis, no looking at their accounts, nothing at all. And about 2-3 months later, it's about 2-3 months ago, this was while I was in Dubai, I think, there was merger talks announced, or acquisition talks, I should say, that the holding company that owns Louis Vuitton was going to buy Tiffany. As a result, the Tiffany share price went up by about 40%. And yesterday I took my profit on that particular trade, which was a 40% profit. on an investment that I made, well, 2 or 3 months ago. Took that off the table. The reason I took it off the table, there's no guarantee this acquisition will take place. And in trading, there is a thing that says, you know, buy the rumor, sell the, is it buy the rumor, sell the story? I think that's it. Yeah, buy the rumor, sell the story. So took that 40% profit off the table for my wife, and happy days. So yeah, I don't normally talk about shares and stocks and all of that good stuff, but I decided I'd talk about that on this particular video. And the inspiration for that strategy, if you can call it a strategy for stocks and shares, came from this book, which I read a while ago. I do read books on stocks and shares because trading's trading. And this book, One Up on Wall Street by Peter Lynch. Peter Lynch, very successful investor, hedge fund manager. And he tells the story in this book of observation he'd made on the high street, or his wife had made on the high street. He decided to buy off the back of it, and as a result made a load of money on a particular share. I can't remember exactly which share it was. So I guess I've kind of Peter Lynched it on that particular Tiffany stock. Doesn't mean I'm going to become a stock player. Far from it. It's a very, very small portfolio. My speciality is currencies. That's what I know. That's what I feel comfortable doing. And that's what I enjoy trading. And this Australian dollar, New Zealand dollar trade just keeps testing me. We've actually touched my target on the screen, but of course with the spread, just check my broker account. It's not, took me out of half of the position. I've got to wait, but patience is a virtue, and I'll check back in shortly. So patience has paid off, and the Australian dollar, New Zealand dollar target has been hit, both in eToro and my private broker accounts. And check this out. Day 93, Wednesday, and very cold here in the UK. I am missing Dubai. 40 degrees of heat, we left there, and now today, goodness me, it's not very high at all. Bonfire night last night, lots of fireworks, quite hard to sleep, it's very noisy. Anyway, with all that said, just wanted to talk a bit about habits. I've got into a bad habit this week. Habits are very, very hard to build and develop, but very, very easy to break. And what I'm realizing is that you can have a good habit, but it's very, very easy to replace that good habit, if you're not careful, with a bad habit. And what I'm talking about here is that this week I have missed every single get-up call early. 5:45 is when I should be getting up to do my morning market analysis. To look at the 6 a.m. close, which could present an opportunity. And every day this week I've failed. Now, admittedly, Monday, Tuesday wasn't feeling particularly well, feeling loads better today. So there was no excuse today. So got to be very, very careful of that. What I've realized is you need an alarm clock. I use my Apple Watch normally. That's in the back of the car. I'm looking at the car now. That's in the back of the car. I was taking that to the gym the other day. Didn't make the gym. So I need to get that back by the bedside table so that the alarm goes off in the morning and I get up. Because if I let this bad habit creep in of not getting up, then it derails all of my disciplines. So I'm late doing my morning market analysis today. And that doesn't feel very good at all. Anyway, with that said, I have just entered a short position in Australian dollar, Swiss franc on the 10 a.m. close. This is a range top sell. Always difficult with range top sells. You know, you kind of, well, I'm selling against the bids, but it is a technical level. We are in a downtrend on the monthly and the weekly, as far as I can tell. So I'm going to hold that and see where we're at. All the other trades that I'm in are in profit, aside from I think one of my Sig 1 level trades. So in a fairly good position. And what I'm finding now is rather than rushing to get into trades, what I'm looking for is reasons not to get into trades. And if I'm looking for reasons not to get into a particular trade, but the overarching reason is that I probably should, then I probably should. Yeah, I'm trying to the focus is trying to stay out of trades rather than get into trades, if that's clear. But anyway, let's have a quick look at this on the screen. Australian dollar short, Australian dollar Swiss franc short. Let's see how this plays out. So here's that trade. You can see we're in a range as far as I can tell. The reason I look at this as a range is because the price action is not respecting the 250 simple moving averages on the 240 chart. We're at the top of this level now. We've had some resistance there, certainly over the last 24 hours. In terms of the daily, let's have a quick look at that. Hang on a sec. Beg your pardon, that is the daily. It's saying 240 at the top here. Not quite sure why that is. Had a couple of problems with Trade Navigator over the last 48 hours in the fact that, I get it now. In the fact that their data feed kind of cut out, and as a result, I had to wait to get my data feed sorted, which I've done now. So there we go. In fact, let me pause this while I zoom in on this particular chart. Okay, that's better. So here we have the daily range. You can see an XY candle yesterday, strong bid candle into the top of the range. Didn't close above the X candle here, so didn't move from range to bullish mode. That could have been an exhaustion bids. We've got some bids this morning. What I've done is put my stop above the 200 simple moving average on the daily. You can see the turquoise lines. That is the weekly trend line down. So a number of reasons to be confident that this is a valid range top sell. Going to put my various exit indicators, my stop pressure plus 10 pips and 50% line in. If we breach those levels, then I'll be out of this trade. But for the moment, could be a good opportunity to make some profit. Well, good morning, and I'm pleased to say that I made it up this morning. 5:45, it was tough. But the motivation to get up was knowing that I didn't want to get on video and say that I'd missed getting up again. Alarm went off very loud on this new phone. Wife wasn't too happy, woke her up as well, but hey ho, that's discipline. So pleased to have done that. Now gonna make a quick coffee, get the morning market analysis done. Feeling a bit tired. I've realised that the reason I got out of routine was being on holiday. In Dubai, we were 3 hours and then 4 hours ahead, which meant that I could have a lie-in and still hit the 6 a.m. close. So anything that takes you out of routine tends to impact your discipline. But I'm going to get back on routine and back in the game. The bigger the challenge, the bigger the coffee needed. So that's the morning market analysis done by 25 to 8. I wasn't even up, I don't think, at this time a couple of days ago. So good feeling to have got that done. I've just entered a short in New Zealand dollar, Japanese yen, and literally seconds afterwards something happened. I'll talk about that in a moment. But let me just jump into the screen and explain what the morning market analysis really is all about. And then I'll explain what the surprise news again. I'll explain what that is and what that means to that particular trade. So the morning market analysis basically does 2 or 3 things. It looks at the relative price or the relative price move yesterday. I call this daily relative strength between all of the pairs that I trade. These are the pairs that I trade. So for example, pound US dollar. The US dollar was stronger yesterday. Pound US dollar, of course, US dollar was stronger yesterday. So what I do is I plot this in this table. This then comes down to here, which automatically works out the score, compares that score to yesterday. So what this tells me down here, this is the real information bit,
is that based on yesterday's results, yesterday's moves on the daily chart, Japanese yen was the strongest currency, followed by US dollar, followed by Swiss franc. Now, with these three currency pairs being strong, that kind of leads to a risk, lack of risk appetite, if you like, in the market. These are kind of Japanese yen, Swiss franc, safe haven currencies. US dollar often seen as a safe haven currency as well. So lack of risk appetite, which, you know, I would expect then to see Australian dollar and New Zealand dollar and perhaps counter commodity currencies down here, which is what we've got. Just hold that thought for a second, because when I jump into the charts, you'll see why things can change in a moment's notice, on a moment's notice in the currency markets. I then look at the positioning of price in respect to the SMAs, so simple moving averages, 200, 50 and 10 on the daily, and 250 on the 240. I've got this in here for the month and the week. It tends to be the week, daily, and 240 that I look at. Based on structure in the market, I'll get a clue as to whether we're bullish, range, or bearish on the daily chart, and it's the daily chart that really dictates the what I call the market mode, whether we're bullish, range, or bearish. So I do this for all of the pairs. I've got notes in here from my monthly analysis, weekly analysis, and also daily where relevant. So for example, Euro Australian dollar moved from bullish mode today to bearish. So that's a bearish signal there. These are the list of the trades that I have on. So that's pretty much the morning market analysis. I also have IG sentiment, so this is my sentiment indicator. I've yet to do this for today. I'll do that in a moment. This tends not to change that regularly, and what I'm looking for is to take the contrarian view against the retail trader. If 90 whatever % of retail traders are wrong, then to fine tune my trade entries, I look to take the opposite side. If 90, if 90, let's say it's 95% of retail traders are wrong or lose money, then I want to be the 5%. And to be the 5%, I've got to take the opposite side. So that's what I do in the morning market analysis. In terms of my weekly trade management, this is the sheet that I do my weekly trade management on. I need to fill this in here. What that tells me yesterday, daily relative strength, is that pound Japanese yen weakened, both on the absolute values here and also on the net change values here. So I need to complete that in a moment. But these are the trades that I have on. Bracketed means that they are risk-free, hence there is no risk. I have my risk calculator, maximum risk exposure, which is calculated off these figures up here, and I'm within my exposure. So I moved a couple of stops in tighter this morning to make sure that my risk exposure was as it needed to be. And then over here I have correlation risk, so this is where I plot all of my trades. What you'll notice here, the maximum number of unprotected trades, i.e. without brackets, that I can have on either side in either box is 2. This is sort of diversifying my risk, so I'm not overexposed to, say, the pound, the euro, or whatever else. So I have a nice spread there of risk. This is my SIG1 trades. That's slightly different. This is the weekly time frame that I trade off. But yeah, this is the stuff I do every single day on a daily basis to kind of mentally prepare me for the day, to give me an overview as to what the market's doing. And yeah, to manage the trades properly, discipline, consistency, all of that good stuff leads to a successful trading strategy. And I've got to follow this to the letter and do this on a daily basis. So just now I entered a short position on New Zealand dollar, Japanese yen. Reason behind this, this was a trend signal that showed up on the 240 chart. I jump into that. Basically, what's been happening on this chart, we've had this move up. We've then had a consolidation just underneath the even handle, 70.00. Tested that once, tested that twice, tested that 3 times, and have come down. I entered here on this, pretty much this candle. Yeah, well, basically these 2 candles. I think it was that candle actually. Entered on that candle. Reason I got in there, what I'm looking to see is pressure down, perhaps on news or whatever else that pushes these stop run, so the buyers are short-term buyers are forced to sell. That liquidation drives the market further down into my target here. Now I've got, in terms of my room to go, I've got the 200 simple moving average in the way. I wasn't too concerned about that on this pair, given the fact that all the pressure in the market, this is the daily, on the weekly, all the pressure in terms of the SMAs looks to be down. If we look at this level here, that corresponds to this 70.00 level. We've kind of tested that test of restructure. This was support. Support now turns resistance potentially, so I decided to get in on that particular trade. Now interestingly, what happened literally seconds after I entered that trade was this. So this is news out. Chinese Commerce Ministry, China and US have agreed to cancel existing tariffs in different phases. So yesterday's lack of risk appetites potentially now on the reaction to the news has turned to, well, risk is okay. Let's buy Australian dollar, let's buy New Zealand dollar, etc, etc. Let's ditch Swiss franc, let's ditch Japanese yen. So the initial reaction to that was bids in New Zealand dollar. Now I looked at this, and without rules, my initial reaction would possibly have been to panic and to get out of this trade. But what's happened is price has come up, it's traded into the 50 simple moving average, and for the moment it's holding. So I'm going to do nothing on this trade at the moment. What I'm going to look to do is wait until this candle closes, 10 a.m. close, and yeah, I've got the wrong. That should be, in fact, let me do that now. It was this candle I entered on. Hey, everybody makes mistakes. As long as you pick them up and correct them, that's fine. I'm going to wait for this candle to close. If we close above the 50 simple moving average, we will also have closed above my stop pressure plus 10. And yeah, I'm going to get out of that trade. I'll get out of it, cut my losses and move on. What can happen, and what often does happen when the news is out, you get this initial reaction. The news is designed to sucker people into this bidding trade. What it does, it gives the longer term player an opportunity to sell into these bids, and then the market drops. So if there's no follow through here, then that's a good sign for further downward pressure. Plus, you know, this news, it's no guarantee that this, you know, trade deal is going to be sorted, or the tariffs are going to be removed. This has been on off on off on off. So, you know, what goes up often comes down. The reaction I don't worry about. I look to see what that reaction does on the candle close. So we'll keep you posted on that. We'll see where we get to on that. Wow, well, today came and went. It is about 25 past 8 tonight, and yeah, quite a lot's been happening. Rather than talk about it too much on the camera, I'm going to jump into the charts quickly just to give an overview as to the trades I'm currently in. There's been one target hit. I've had two enforced what I call SP10 exits, early exits, but yeah, overall not too bad. So I'll jump in the charts and show you that now. So first, a quick review of, not review, but overview of pound dollar cable. I was considering a short trade here. I didn't take it. I took euro US dollar instead. And one of the reasons I didn't take this is because I am in a SIG1 long trade on this pair. I've got a one-to-one reward risk already locked into that on the weekly chart. This could be a temporary blip. The pound's very volatile at the moment with the whole Brexit debate, so I took the euro US dollar trade instead. The other reason I didn't take this trade, on the daily, we're going to run into the 200 simple moving average. If price does indeed drop down, this could be a place where buyers get back in. Different story on euro US dollar. Underneath the daily 200 simple moving average, look to be at the top of the trend line, the turquoise line, which I draw on the weekly chart. And then if I go into the trade itself, that I entered. When was this? 6th. That was yesterday. So yeah, we traded down. I've had a close below my entry, which means my stop pressure plus 10 falls away. I'll talk about that in a moment. Got a close below the 240 200 simple moving average. So yeah, making all the right noises, to be honest. So glad I took that trade, and I'll stick with that trade until it tells me otherwise. Next, let's move into the synthetics. And here we have my Euro Swiss franc short. We're bouncing around this even handle 1.1000, holding the 50 simple moving average on the 240 chart for the moment. Because of this kind of uncertainty, it's not really pushed down as hard as I would have liked. I've rolled my stop to entry. This is now a risk-free trade. Obviously, I've got you know, the broker fees that I might need to pay on that, but you know, to all intents and purposes, it's a risk-free trade. And I reduced this risk for these reasons, but also because my maximum risk exposure, which is down here, was too high at that time. A few things have changed since then, which I'll talk about in a moment. So yeah, this is a risk-free trade. On the daily, where are we? Well, the pressure looks to be down. You know, these wicks here, 1, 2, 3, 4, kind of tell the story that the buyers are testing the market upwards, but the offers are coming in. But who knows? We need a push down and close below the 200 simple moving average on the 240, as we just saw on Euro US dollar, to give me a bit more confidence that we're going to come down and hit my target on this range trade. Into the commodity pairs, and this is my pound Aussie short. Got short on a trend trade strategy here. We're underneath the 3-year high, which gave me a bit more confidence on this trade. And we finally hit target today. I put my target, I kind of moved this target, still within or still over a 1-to-1 reward risk ratio on this trade. I've moved my target in line with the 200 simple moving average. We've had a bit of a bounce off there, some bids off here, stops well away above the 50 simple moving average. If we get a close down below this, there could be some more downside momentum. So took off half the position, still got half the position remaining on, and that's what you can see here. Trend trade, no risk now, target hit, and that was the profit taken off there when that target hit earlier on today. Australian dollar, in fact, let me do Australian dollar, New Zealand dollar next. This is a similar trade, target's been hit. So what's happened here? Target was hit here. I've rolled the stop to entry, holding the position here. Looks like we may, let's see, ooh, maybe not. I thought we might get a close above the range today. Looks like we may not get that close above the range, so we could still be in range mode. If we got a close above this level, we'd be back into bullish territory. I talked about this trade in my blog post earlier this week, stgforex.tv. stgforex.tv. You can read, I think it's day 92, as to why this was a really good long opportunity, and a longer term long opportunity, as I see it, based on the higher time frames, supporting bids to the long side. But yeah, this is a risk-free trade, Golden Gate strategy, no risk here, target hit, profit on target. Now into a couple of the more frustrating trades that I have been in over the last 24 hours. This was a range top sell I took yesterday on Australian dollar, Swiss franc. Range top sells, range bottom buys, always slightly risky, but took this trade. Let's have a look on the daily. Yeah, we'd got the daily 200 simple moving average kind of coming down as resistance above potentially. Took this trade. My rules say that if we where are we? Yeah, my rules have this stop pressure thing here. In fact, as I talk about this, I have realized that actually I exited this trade, but I didn't need to do it. So reviewing this trade has actually helped, because basically what's happened here, my rules say that after 12 hours, that's 4 hours, 8 hours, 12 hours, if I've not got a close below my entry, then I need to think about getting out. If price has closed above my stop pressure plus 10 pips line, I would get out at that point. If price had not closed above my stop pressure plus 10 pips, I would give the trade, and I hadn't had a close below my entry, I would give the trade another 12 hours. But in actual fact, because we got the close below my entry, this stop pressure rule should fall away. But yeah, I've exited on a SP10. Technically that's not correct. There's a live and learn element there, which I'm putting out there on the YouTube channel here. Yeah, I'm out of this trade anyway for a small loss. Australian dollar, where are we, Swiss franc, yeah, small loss, basically around about 1% of equity instead of 2% if we were stopped out up here. Price looks to be coming down. Having said that, it's held this trend line formed by the, or backbone formed by the 50 simple moving average. So this will go down as a mistake that I'll learn from. But yeah, at the end of the day, the exit may have been the right decision anyway. Let's look at New Zealand dollar, Japanese yen. This is a similar story. Now, I got it right here. My rules say, okay, entered here within 3 candles. Yeah, what I'm looking for is price to have closed below my entry. If price hasn't closed below my entry and price hasn't closed above my SP10 line, I would give the trade another 12 hours. What's happened here? 4 hours, 8 hours, 12 hours. Price has not closed below my entry, and price has actually closed beyond the SP10 line. So I've got out of this trade. I've exited this trade, and the candle I exited the trade on was a test of the 50 simple moving average. We've got this S wick, so I'm pretty happy to be out of this particular trade. So this SP10 rule, it's basically the average stop pressure plus 10 pips that I get on my winning trades, so that I know on average if price goes beyond that, then possibly I'm too early, too late, or just in the wrong trade. Yeah, got out of this particular trade. So what that means for where we are in the week is that irrespective of my Sig 1 trades, I've got target 1 hit here, target 1 hit here. This is 50% of these positions taken off. These positions now are all TC3S. Yeah, these positions now are all risk-free trades. This one is a risk-free trade, not hit the target yet, hence there's nothing in there. There's no risk. But these two effectively still 50% of the position on. These two trades, losing trades, I've established that I didn't need to take that loss there on an SP10, but hey ho. What it means is this illustrates the game of probability. The idea is here, okay, took profit, took a small loss. This trade and this trade, they're still running. So if this trade and this trade go on to be a big winner, then this small profit now would increase to a larger profit. That's the game of probability. Cut the losses short, the trades that aren't working, cut those short, let the winners run. But what I do is take off 50% of my position when the initial target's hit. I have had a problem in the past of taking profit. You hold something, you think it's going to go to the moon, it never does. So at least I take some profit off in case things do reverse on me. So yeah, that's it for today. It's around about 20 to 9 now. Pretty tired. Got an early start tomorrow, so I'll shut the charts down, stop this video, and be back again in the morning. Morning. It is Friday morning, around about 7:30, up at 5:45. So discipline back in check. Morning market analysis. Not a lot's happened overnight.
I have got a meeting this morning, so sat in the car. Got to get off to this meeting. It's a new career coaching client, executive career coaching client that I'm working with. Many similarities between the career coaching stuff that I do and what it entails to find success in the markets. Very, very similar in terms of the focus and the attention, discipline, consistency, etc., etc. So I'm going to meet this new client, have a good meeting, hopefully, and then get back, hopefully, for the 10 o'clock close to see where the market is. So it's Friday around about 25 to 10. Today's really got away from me. Had that meeting this morning, which went really well. Then was planning to get to the gym, never actually made it. Came back to the house, checked the 10 a.m. close, not much had happened. And it's been a similar story all day. So it's market's going to close in about 25 minutes. And I'm kind of in a position, the same position I was first thing this morning, but that's sometimes how the day goes. That's absolutely fine. So I'm going to wind it in, process this. I'll send this videos off to my developer and get the video sorted for this week, ready to start a new week next week.